In this video lesson, I would like to explain a little bit more details about how to use Fibonacci extension and also Fibonacci retracement in order to get potential support and resistance levels that could be useful in trading. So you can also plan your trading with the take profit, stop loss level, and so on. Now, in this video lesson, the goal is always to use the technical analysis only, without fundamental analysis, only by using a support and the resistance levels. These are horizontal red lines, which you can see here. The thickest, the red line is the monthly support and the resistance level, and on the smallest scale, this one is a 4-hour time frame, this dotted line. You can see that there are different thickness of these lines, and the smallest one is this one, the daily time frame. So for example, if I go to the daily time frame, you will see these horizontal support and resistance lines as a red line visible here. The thickest one are the monthly, so you can see how the price goes between these two price levels on the monthly time frame, but you can see also on the daily how they are doing and also respecting these horizontal support and resistance levels. I will use 4-hour time frame to show you more details and also more examples by using Fibonacci. Just a minute. To use Fibonacci levels in order to determine where is potential support and resistance levels, and especially if you have already a support and the resistance levels like I have on the chart, it will add more confirmation to the trading analysis. Now I have also put here, you can see that blue lines which are with a full line and also a dotted line, they all represents dynamic support and resistance levels, which are called trend lines, and two trend lines also making a channel, so we can see where is the trend. And currently what I can see, the trend is on the 4-hour time frame. It is a bullish where the price has entered again into this bullish channel. Now for the Fibonacci to enter, before I continue with Fibonacci, regarding this support and the resistance levels, and you can see the area around them, it is a supply and demand zones. They are very important for me to make the analysis and also determine where the price could bounce, because sometimes the price do not come to this horizontal line, which is a support and resistance, but it comes very close to it, which then is respected as a supply or demand zone. For example, this resistance level, because of the price is going up and down, you can see that the price in this case with this white candle, bullish candle, did not reach this area resistance level, but it has come very close to it, and then we have a second candle coming to this resistance. Now if you go in the future, you can continue to move on, you can see that this black line here didn't touch this horizontal support because the price is dropping down. The price did not reach the support level, but it has reached an area around this support level. So it has touched this buying area, which is also called a demand zone where the buys are. And then from there, the price has bounced back up to the first resistance level. Now, this is the area that is very important to me, because sometimes the price do not come completely to this horizontal line, but it comes very close to it. So these are supply demand zones, very important for me to determine where the price could bounce and catch the trade, or to exit from the trade before I lose everything from the profit and going, for example, into loss. Now let's continue with the Fibonacci. Now to add Fibonacci here on the MetaTrader 4, currently I'm using a gold against US dollar on a 4-hour time frame. To add them, go to Insert and select here Fibonacci. First of all, I will use retracement because I will use Fibonacci to determine where the price could retrace. Now, first of all, start with the lowest point of this swing and go to the highest point of this swing, which means, what is a swing? Swing is a movement that the price is doing, and then it is changing the direction. For example, the price has started from this level and it has gone up, didn't go down, then it has gone up, didn't go down, then it has go up, and then it moved down slightly more than before. You can see that here. So this is the top, this is the bottom. So I need to go from the bottom to the top to see now where the price could retrace back down. Where are those levels? Now, when I have put these Fibonacci here, retracement, now you can see what are the levels. First of all, 23.6 level is at this support level, and we can see that this is the 4-hour time frame, a support level. Then we have 30.2, where we have right here at the daily support. Then we have 50, very close to the 4-hour time frame support. Then we have 61.8, very close to this weekly support level. And we can see how the Fibonacci retracement are also respecting as similar to the support and resistance levels I have created. Now, how to add and how to use Fibonacci in this case? Because I already have these support and the resistance levels. Imagine that I didn't have them. So this would be very helpful for me, that Fibonacci retracement shows me where is potentially support for the price when the price goes from this area to go down. So first of all, we can see where the price has stopped at 23.6, then it has stopped at 30.2, then after that the price did not move down. I will select more examples just to show you if there is the price is respecting, but you can see for sure that the price would reach this area and would bounce back up, because this is the support level. It has reacted in the past. Here you can see the support, here is the support, and then it is also acted as a resistance. Now below that we have a weekly support level 61.8, and we can see it is also respecting as a support in the past. You can see that here. It has gone down, we can see that it has been broken, but then the price has bounced from this support level and gone up, and then eventually broken and going even more down. Now these Fibonacci retracement levels are very helpful to determine and also increase the success of these support levels. How to use them in trading? So for example, if you are trading in these levels and you are trying to short the Euro USD, that means open a sell order. For example, let's open a sell order, and this means I am currently on a demo account. I have virtual money, so you can also use that if you would like. For example, I will click sell order, and from here currently I am expecting that the price will drop down. If I am trading this one, where would be my stop loss with this Fibonacci? For example, first of all, I will put here a stop loss right here or right here, because it is above this week here, because the price could not manage to go up above this resistance level. It was previously support. Or I will go up above this one, which is also above this resistance level. So I have two choices. Will I come here or I will go here with a stop loss? That depends, also depends what you are catching. Are you catching to get out from here, or are you catching to get out here or here? First of all, because the price is right here at this resistance, I will also do this. I would put stop loss here. Let's do that. Just a minute. Okay, 500. Here it is. So I will put here my stop loss, and my take profit would be right here, just above this support level, where is the Fibonacci 30.2. I have put here right above. Let me increase this one so it is much easier to see it. If I put here my take profit, there is a chance that the price could, for example, like in this example, the price has gone from here, it has gone down, it has gone right to here, but did not reach this support level. After that, the price bounces back up, but eventually the price has gone down. This could also happen that the price creates this one and continues to rise in value instead of going down, reaching my take profit. So to be on the safe side, I will also like to take my profit before this demand zone, just in case the price reverses back up and continues to move against me, not reaching my take profit, which is right here where this support level is, 2356.22. Now you can see it is very close to 38.2 Fibonacci retracement, but it is not mandatory to put the take profit or stop loss just right at this level. It's not necessary. It is always better to be on the safe side, to exit the trade before the price comes to here, because eventually the price can bounce before reaching and never reaches your target, and then completely wiping your profit you had and going against you and go into loss. So you can see how this is very good to use Fibonacci retracements. You have levels that are in line with the support and the resistance levels that I have put manually. Now, if you do not have these horizontal support and the resistance levels, put them manually, you can also use Fibonacci retracement, like in this example, where it shows you where is potentially the support and the resistance levels. Now, Fibonacci retracements are not very precise. As you can see, it is not in line at the same price level where I have put these support and resistance lines, but they are very close to each other. Now you can see it is a small difference between these between these two levels. Now let me show you one more example. Let's find another one where we could use these Fibonacci retracements. Now, for example, let's take a look at this one, because the price has gone from this bottom to the upper side. let's take and put Fibonacci retracements here, just to see are these levels in line with them. Let's put them here. Now here it is. Now let's see where these levels are. First of all, 23.6 is very close to the 4-hour time frame as support level. It's very close. Then we have 38.2, which is between this support and this support, which is not in line. So this one is not very good. It is not the same as I have created. Then we have 50, which is very close to this one. Then we have 61.8. It is very close to this one. Now again, my manually drawn this horizontal support and the resistance levels are based what I can see on the chart, what I can see what is the price is respecting. These Fibonacci levels, which are created right here, you can see it is also some kind of automatically created when you draw them here on the chart. So you can see it is not 100% the same. So will you base your Fibonacci retracements solely on them? I would not do that, because only Fibonacci retracements, as you can see, it is not showing, for me at least what I can see, it is not showing me precise what is the levels here on the chart, what could be the support and the resistance levels. But adding them here to the support and the resistance levels with supply demand zones, it is increasing my confirmation that these levels are correct. Now let's go and use one more thing, and that means let's use, just a minute, let's use a Fibonacci expansion. Let's take a look. All right, this one here, and put this one right here. Now we can go and see what are Fibonacci expansion levels. Just a minute, 100%. Okay. Let's move slightly to the right. Okay, Fibonacci expansion, what we can see where the price could go. After the price has gone from this upside to the downside, the price has reversed back up here to the first. And then what could be the expansion levels, which means where the price could go in the future after the price goes down below this one. What you can see, the first level where the price could go is this one here, which is 61.8, and this is the price level where the price is reached in the future. Then we have here another one level where is 100. We can see that here. So if we go in the future, we will see, will the price reach this price level again? This is something that we need to figure out in the future. Will the price respect this price level after the price is going down below this level? Now, this is the level also that is being confirmed with the Fibonacci expansion, which means it is adding more value to this price level I have created here as a support level. This is also one of the targets that could be to see the price going in the future. Now, let's take another one example. Let's go to the right side and let's increase this one. So it is much easier to see. Let's close this order as an example. Now, let's take a look where we have also one of the expansion levels when the price has reached, where the price has gone in the future. For example, we can take a look. Let's see here where we have more details. For example, let's take a look here, this one. Let's remove this one also. Let's take a look an area from here to here. What is the expansion level after that? Is the price has respected the Fibonacci expansion levels? Now take a look here. We go from the bottom to the upper side. This is the one. Then we select our retracement level where the price has retraced, and then see what are the levels in the future. After the price has reached this one and has gone above this, which means there is nothing above that, what could be the levels in the future? Now we can see 61.8 is very close to this one where the price is reached in the future. Then we have 100% where the price has reached all certainly, and then again in the future 161.8 has been reached also. After that, and we can see what happens. For example, if we have in the past also these levels that are created where the support and the resistance levels, like in this case, we could also see what are potential levels where the price could reach. This was the first one that is on a 4-hour time frame, it is a resistance level. It has been reached with this candle here, with this wick, and it's 61.8. After that, the price has reached this one price level, and it has also reached higher price levels, where we can see 100% rise has been also reached. And after that, the second one also has been shown where the resistance is, where the price could reach. Now you can see Fibonacci expansion levels and also the retracement levels are in line with the support and resistance levels most of the time. There are some levels that are not in line, but that is normal. We cannot figure out the same levels all the time. But adding more tools to your technical analysis like Fibonacci to the support and resistance levels with the supply demand zones will increase the chances of success and also increase the finding the trade that are profitable ones. Now I hope this has helped you to define where to put Fibonacci levels, and also how to add support and resistance levels together with Fibonacci just to increase the validity of those levels. You can see also how to predict in the future where could be the potential support or resistance levels as the potential targets in trading. So if you open a buy order, for example, in this case, you could open buy order right here with the take profit right here, or here, or here, or here, or here, depending how long are you going to stick in your trading. Now, if the price goes against you, the stop loss will be right here, which is below this retracement level after the price is retraced from this area. This is something that you could use and also increase the chances of confirming this support and the resistance levels as a valid one. If you have any questions regarding Fibonacci retracement levels and also expansion levels, feel free to leave a comment. I'll try to answer as soon as possible, make a video for you to understand more clearly. If you like this video, click the like button and subscribe. See you next time and happy trading.